Hello and welcome to Business 360. I'm Arundhati Ramnan and here are the top headlines that we're tracking for you this evening. Stock markets extend the winning streak to the 8th day after a late recovery. Sensex and Nifty end with marginal gains. Financials lead the charge. Rupee weakens against the dollar and 10-year bond prices decline. The dollar index gains strength after the minutes of the U.S. Federal Reserve's meeting points to another 75 basis point rate hike. As crude prices trade near 6-month lows, government likely to cut the windfall gains tax on oil companies during the fortnightly review. Sources say export duty on diesel also likely to be reduced. Shares of Indian Energy Exchange decline after 13 states likely to have been barred from buying power. These states have outstanding dues and may have been barred under new late payment rules.
We think there's going to be 100 million people that join the formal digital economy in India in the next couple of years.
The global CEO of Mastercard, Michael Maybach, is bullish on India, says it can become the largest digital economy in the world. Also adds that Mastercard is a payment technology company and not a card company. That's an exclusive. The chairman of the Competition Commission, Ashok Kumar Gupta, promises faster clearances after the proposed changes to the competition law. Also adds that search and seizure powers can now be used without reference to Companies Act and warns that furnishing wrong information will invite penalties. The Delhi High Court maintains the stay on Consumer Protection Authority's order barring restaurants from imposing service charge, allows more time to restaurants to file their reply. Court also observes that restaurants are bound by law to pay their employees and cannot make customers liable for it. Those were the headlines that we're tracking for you. Let's start with the day's market action, where the bulls managed to maintain the winning momentum. Stock markets opened in the red after the minutes of the last U.S. Fed meeting hinted at another 75 basis point rate hike. But the Sensex and the Nifty managed to erase the losses towards the end of day to end in the green for the 8th straight session. Financial stocks led the charge. Anuj Singhal is here with a wrap of all the market action. Anuj?
Well, the market's texture is clearly buy on dips, and that played out today, not just once but twice. The market dipped twice towards 17,850 and managed to bounce back, in fact gaining about 100 points. The Bank Nifty outperformed, gaining about 0.5%. On the gaining side, you had names like Kotak, Larsen, ITC, Tata Consumers did well, SBI Life and SBI itself also did well. The other space which looked good today was cement, whether it was the large cap names like Ultratech or Shree Cement, or some of the mid cap names like India Cement, Dalmia Bharat, the two news driven stocks, Ambuja and ACC, also doing well. IT was down today, taking cues from Nasdaq, so Wipro, Infosys and HCL Tech were down. And in the F&O space, we had some big movers like IRCTC, Adani Enterprises and BHEL. Now, it will be interesting to see if the global cues improve, because that was something which we lacked today. Because if we do, then a gap up is something that can take Nifty past the 18,000 mark.
All right, Anuj, thank you so much for those details. Now, with the minutes of the U.S. Federal Reserve's meeting indicating another 75 basis point rate hike, the dollar index gathered more strength, and this led to a weakening of the rupee in trade today. 10-year bond prices also dropped and the yield shot up by nearly 1%. Meanwhile, crude oil prices are attempting to recover after hitting the lowest level in the last 6 months. The U.S. crude stockpile fell by 7 million barrels and the fuel consumption data was robust. The outlook for supplies remained tight, with the EU expected to impose drastic cuts to imports from Russia. Domestic refiners can expect some relief in taxes. Sources say the government is likely to cut export duty on diesel and windfall gains tax on crude in the next fortnightly review. Timsi Jaipuria has all of those details. Timsi, what are you picking up?
Well, that's right. What sources are indicating to us is the fact that when it comes to the fortnightly review of the windfall gain tax levy, which was introduced on 1st of July on domestic crude producers, Revenue Department, as we speak, is currently doing a fair assessment of the fortnightly correction that it has observed based on the data shared by Petroleum Ministry on the average international crude oil prices. What we are learning is that government is likely to cut the windfall gain tax levy in this third fortnightly review based on the recommendations that the Petroleum Ministry has shared, which has recommended a cut in the tax due to falling crude oil prices. If we look at the overall scenario, what we are given to understand is that the Indian crude basket has declined from $116 per barrel to about $96 per barrel in August itself. And that's how the levy is likely to be further reduced Whether government does a reduction and how soon it announces, well, our sources said that the Revenue Department has taken on board the recommendations of Petroleum Ministry, but a final decision still rests with the department, and they will come up soon with an appropriate notification. So let's see, because the windfall gain tax is a combination of two levies, that is a cess on the exports of crude and also special export duty on the final products, that is petrol, ATF, diesel. So let's see where we stand and how soon government is able to announce this.
Right, Tim C. So domestic refiners could see some relief there. Thank you so much for those details. Now, the shares of Indian Energy Exchange dropped by over 3% in today's trading session, prompting us to find out the possible reason. We figured that investors are concerned about the stock's performance as 13 states are likely to be barred from buying power from the exchange due to non-payment of outstanding dues. Nigel D'Souza joins us now with those details. Nigel, how is the stock being impacted?
Well, that's right. IEX was under some pressure in trade today on fears that their volumes could get a hit in the near term, as 13 states may be barred from participating in the power exchange. This is under the new late payment surcharge rules. The idea behind this is to reduce the GenCo's overdues. Analysts estimate that out of these 13 states, half of the states contribute 40 to 50% of the total volumes of IEX. The applicability of this is from tomorrow itself. So IEX volumes should be tracked from tomorrow onwards. The order might bring about discipline into the system on the receivables front, but in the short term, it could have its consequences. Since the states are hard-pressed for power, the repayment of dues could come in, which will diffuse the situation. The short point is, it could have an impact on IEX traded volumes in the short term. Meanwhile, resolution will be eyed as the states look to clear their overdues.
Right, Nigel. Many thanks for those details. Now, Bharti Airtel's chairman, Sunil Bharti Mittal, is full of praises for the government's successful conclusion of the 5G spectrum auctions, calling it as ease of doing business at work in its full glory. Mittal said Airtel was given the spectrum allocation letter within hours after the company paid over 8,300 crore rupees towards dues. He said, and I quote, "No fuss, no follow-up, no running around the corridors, and no tall claims. This is ease of doing business at work in its full glory. In my over 30 years of first-hand experience with the DOT, this is a first business as it should be." There's another settlement of dispute for SpiceJet. The airline and Credit Suisse have withdrawn the litigation from Supreme Court after placing terms of settlement before it. Allowing the request for withdrawal, the apex court granted liberty to the parties to approach the Madras High Court for withdrawal of bank guarantee for $5 million deposited in the court. Remember, the payment dispute had led to the Madras High Court ordering the winding up of the SpiceJet. Staying with aviation, air traffic data from July shows passenger traffic was down by over 7% versus June, largely due to the lean monsoon period and hardening airfare affecting leisure travel. As for market share, Indigo topped the list at over 58%, followed by Vistara at over 10%. Air India, SpiceJet and Go First follow close behind at around 8% each, while AirAsia's market share stands at over 4%. The big newsmaker this evening, the global CEO of Mastercard, Michael Maybach, is bullish on India. In fact, he believes India can become the largest digital economy in the world. This optimism is backed by recent data and the enthusiasm with which India has embraced online payments. Sample this. Digital payments in India has seen a growth of 160-fold in the last 20 years. India is ranked #1 in real-time digital transactions. According to a study by BCG and PhonePe, India's digital payments market is currently worth $3 trillion. It is expected to grow at more than threefold and hit $10 trillion in the next 4 years. This exponential growth is possible thanks mainly to three key factors: 460 million Jan Dhan bank accounts that has brought many people into the formal economy, more than 1 billion Aadhaar-based unique identification numbers which enable Know Your Customer rules, and more than 750 million mobile phone users. A testament to this growth is the Unified Payments Interface, which is clocking a growth rate of 200% annually over the last 5 years. UPI is responsible for more than 60% of non-cash transaction volume in FY22. So all this has made the CEO of Mastercard bet big on the India story. He spoke to Shirin Bhan about what he makes of India as a market and Mastercard's plans to bolster growth. Take a look.
What I see today, particularly through the lens of our business, when we look at the digital economy and how it's growing in India and the growth rates of UPI and so forth, there is technology put to work at scale in unprecedented ways in India. And as a tech company and as a tech geek, I find that hugely exciting. So I'm going to go back and see there's models emerging in India that we should all think about and see what else we can do and how we evolve our business in partnerships with fintechs and other companies that are using this technology here in India.
From your strategy of buy, build or sort of partner, where does India fit into that strategy currently, and what is it going to mean in terms of future investments?
So let me just say a few things. We're not a credit card company to start with, so let's just...
I think that transition you've been on for the last couple of years.
Let's just baseline on that. So as a payment technology company, we kind of broadly speaking, what we do, our strategy is be in payments, whatever choice of payments is there. Like India is offering a lot more choice in payments than was there even 5 years ago. So it might have been cards, and now it's UPI, it's account to accounts, push payments. You want it, you have it in India. So we want to offer solutions in all those spaces. That's our stated strategy. It's different in different countries, and here in India, certainly there's more choice and better for that. But then that's also the question. So if you have that rapidly rising digital economy with all these different payment choices for people, how do you keep it safe? How do you keep it simple? That's another part of our strategy, where we say every kind of service that makes this simple, address the cyber risks, is your digital identity compromised, all those kind of things we take care of, and we then partner. And that comes to the partnership point. We say on payments, there's a lot of partnerships required, for example, on nascent areas of payments, B2B payments. There's a lot of inefficiency in B2B payments, which we bring solutions to the party. Basic P2P payments, here in India, UPIs are an amazing success. We don't really need to partner on that, but the question on cybersecurity and how do you make sure that these payments remain safe as this becomes one of the, if not the largest digital economy in the world, that's a partnership area. Then you go into some of the big questions that India is addressing that many other countries will face, and that's the question of an inclusive digital economy. Hundreds of millions of people. We think there's going to be 100 million people to join the formal digital economy in India in the next couple of years.
And speaking of digital payments, the Reserve Bank of India has released a discussion paper seeking public feedback on various charges levied in payment systems, including UPI and credit cards. Ritu Singh has all of those details. Ritu?
Well, yes, RBI has released a discussion paper on the charges levied in payment systems, but importantly, it has not taken a stance on these just yet. What it has done is raise questions on a wide range of issues and sought public feedback on them by the 3rd of October. Broadly, these questions ask if digital payment charges should be market determined or regulator prescribed, and how they can be made more transparent. Now, for instance, for funds transfer, like your IMPS, RTGS and NEFT, RBI asks if charges should be prescribed or if there should be a cap on IMPS charges, etc. Debit cards, as you know, is the only merchant payment instrument where RBI has intervened to bring down charges, and here it is seeking feedback on whether regulatory intervention is required or if stakeholders can decide on an optimum level of MDR and interchange rate, and if RuPay debit cards should be treated any differently from the rest. MDR, as you know, is the fee that is paid by merchants to the banks for processing payments. Now, on credit cards, and this is important, RBI so far has not issued any mandate or intervened in the charges, even for PPI-based merchant payments or fund transfers. And this paper has sought feedback on this front as well. It has also sought feedback on, for instance, if people pay their credit card dues ahead of time, shouldn't that get reflected in lower MDR and their CIBIL scores, etc.? UPI is also under the scanner, where the government has mandated a zero-charge framework for such transactions. Now, this paper looks at general feedback in the context of zero UPI charges and asks if subsidizing cost is a more effective alternative, and if UPI transactions are indeed charged, should MDR for them be a percentage of the transaction value or a fixed amount, etc. It also looks at payment intermediaries in areas such as surcharge, convenience fee, etc. Now, while there's no real giveaway in terms of which way RBI is leaning, but if you do look at their payment vision document, affordability for customers and greater digital adoption is desirable. So unlikely that charges will go up significantly for customers. If they do, they might be borne by banks, fintechs, etc. But the impact on banks and payment companies because of these changes in charges will be significant to watch out for.
Right, Ritu. Thank you so much for those details. Now, the global CEO of Mastercard also responded to the RBI's consultation paper on payment charges. He said he liked the central bank's consultation process and will engage with authorities on this matter. Take a look.
So I just glanced over this morning. I find the thought process behind that and asking the kind of questions that were asked are the right kind of questions, they come to a point that I mentioned earlier. It's not just about the technology. It's about the broader ecosystem and the kind of questions that are being asked about commercial sustainability, because commercial sustainability often links into innovation. So I quite like that consultation process. So we will certainly be engaging with the RBI and say, here's our experience and what we've seen and what we think can work here in India.
And the Mastercard CEO is also fascinated by India's passion for cricket. He said that the company would like to be associated with the sport and hinted at potentially sponsoring the BCCI.
Sponsorships and passion, it's just something that works for us. The term priceless, you know, when you think about UEFA Champions League, there's so many priceless moments. In cricket, there's so many priceless moments, so it's just a natural fit to us. Whatever is a national pastime, we are always interested. So there's active interest, so we're engaging. It's a potential opportunity, but it is a potential opportunity. So this is about as much as I can say right now, but I'm very keen and interested on these kind of national sponsorship.
Do you follow cricket at all, though?
So I actually played this one time. The playing is probably the wrong word. I tried it one time. I lived in the Middle East for a long time, had a lot of Indian colleagues, and we went out to a cricket thing. And it struck me that it's weird to throw a ball on the floor because, like, I grew up with soccer. That's not what you do. But if you just see the lit up faces and the passion around the sport, it's just fascinating. So we want to be associated with it.
And you can catch that entire conversation with the CEO of Mastercard at 6:30 and 9:30 p.m. right here on CNBC-TV18. Car maker Maruti Suzuki's Alto K10 debuted in the hatchback segment with a starting price of nearly 4 lakh rupees. Speaking at the launch event, the company's managing director said Alto was one of the best-selling models last fiscal, with over 43 lakh customers in India until last month. He added that the upgraded version of the Alto model brings out a value-packed small car for today's young Indian. Take a look.
Our market share in this hatchback segment is like a 2/3 or 68% actually. This is our market share in this hatchback segment. Now the Indian economy is growing. Also, people's purchasing power is increasing. So more and more people will be able to access, and they can afford to buy cars. So that segment will grow.
And a big boost to Tata Motors' electric vehicle business, the company has bagged a major order of providing 921 electric buses to Bengaluru. The company will supply, operate and maintain these EV buses for 12 years. The government has once again extended the last day to submit applications for the Specialty Scheme PLI scheme. Manufacturers can now submit their applications till the 10th of September, making it the third deadline extension since its launch last year. The 6,300 crore rupee scheme aims to incentivize domestic manufacturing of a variety of specialty steel products. The government anticipates investment of nearly 40,000 crore rupees and capacity addition of 25 million tons. On that note, it is time for us to head into a short break. But coming up next, the Delhi High Court maintains the stay on Consumer Protection Authority's order barring restaurants from imposing service charge. Details when we come back. Stay tuned. Welcome back. You're still with us on Business 360. Now, the chairman of the Competition Commission, Ashok Kumar Gupta, has promised faster clearances after the proposed changes to the competition law. Speaking to Nisha Podar, the Gupta also added that search and seizure powers can now be used without reference to Companies Act. He also warned that furnishing wrong information will invite penalties.
The search and seizure powers were already available with the Director General. In the existing statutory architecture also, the Director General has been vested with the search and seizure powers, which is deriving from Companies Act. The bill now proposes to make that provision of the Competition Act as self-contained without reference to the Companies Act. I see no reason for any worry on this account. Experience across the globe shows that some mergers may change market structures and distort level playing field. This may, over a period of time result in unfair pricing and poor quality of goods and services. This may require correction at the stage of merger itself. CCI has always facilitated quick approval of M&As. The average number of days to approve M&As has already come down to 17 working days only, primarily because we trust the information filed by parties.
The Delhi High Court maintains the stay on Consumer Protection Authority's order barring restaurants from imposing service charge. The court allowed more time to restaurants to file their reply. Ashmit Kumar is here with all the action from the court. Ashmit?
Well, just for the benefit of hindsight for our viewers, let's keep in mind that the CCPA, the Central Consumer Protection Authority, had come out with guidelines barring the levy of service charge by restaurants. Subsequently, the Restaurant Association moved to the High Court, and in July, the Delhi High Court had stayed those guidelines and thereby allowing restaurants to continue charging service charge from their customers. Now, what's interesting is that the CCPA challenged that stay order before a division bench of the Delhi High Court. That's what was heard today. The arguments were exchanged, and importantly, the CCPA had argued that the CCPA is acting well within its powers, that it has received lakhs and lakhs of complaints, that this is an arbitrary application of charge, that restaurants, by including it in the bill, confuse the consumers into thinking that this is some kind of government levy, whereas it's not. And further, the CCPA argued that the restaurants can remunerate their employees by simply increasing the prices of their products. The Restaurant Association on their part, however, argued that, look, this has been a practice which has been implemented for over 70 years now, that this is, they're acting well within their rights, that the government cannot introduce price controls as far as commercial operations are concerned, and that it's a private contract between the restaurant and the consumers and the customers. The Delhi High Court at this point did observe that if the restaurants are interested in remunerating, in offering better packages to their employees, they can do so by raising prices, and that obligation cannot be shifted to the customers. While this was an observation that came, but what's important is that the Delhi High Court, as so far, has not tinkered with the stay order, has allowed that stay order to continue. So what that effectively means is that the restaurants can continue to go ahead and levy service charge. One important aspect to keep in mind, the hearing will resume once again on August 31st, and that's when we can expect more clarity on the way forward.
All right, Ashmit, thank you so much for those details. Now, it's a bitter pill for pharma companies after that index fell 0.5% post-sell-off on U.S. generic stocks following a dispute settlement over Ranitidine, a high-risk drug. That's not all. U.S. President Biden signing a law to rein in prices of prescription drugs also hurt sentiment. Ekta Batra joins in with all of those details. Ekta?
Well, yes, it's a down day for frontline Indian generic pharma companies such as Sun Pharma, Dr. Reddy's and Cipla. Now, while analysts and experts can't pinpoint a specific reason for the weakness today, there is a likelihood that the correction is on the back of the US generic stocks such as Teva, Perrigo, as well as Taro correcting overnight in the US markets. Analysts say the market seemed to have been spooked by a settlement on the popular antacid drug Zantac and Zantac generic, or the chemical name Ranitidine. Remember, the drug was pulled out of the US in 2020 by the US drug regulators on fears that the drug contains a cancer-causing substance, NDMA. Now, the lawsuit was against some of the manufacturers of the branded and generic versions of Zantac by a 79-year-old man, Joseph Bayer, claiming that the drug, which he bought over the counter and consumed, caused his esophageal cancer. The generic pharma companies such as Teva, Perrigo, Sun, Dr. Reddy's made a combined settlement of over $500,000 with Bayer a week before it went to trial. Now, the settlement amount of the combined 500,000 odd was not that much and will be less than if the case went to trial. But the news has cropped up fears that the other similar lawsuits on Ranitidine could result in a liability litigation, which could end up costing billions of dollars to resolve. Also, while litigations on generic drugs is a normal course of business, the fear is the large number of cases for Ranitidine. Reports indicate there are currently more than 2,000 lawsuits in the US against manufacturers of Ranitidine on allegations of it causing cancer. A US-based brokerage house that wrote on the matter indicated there is substantial uncertainty surrounding the total financial impact of the Zantac litigation. Lastly, the fear is that NDMA has also been found in other drugs in the US, such as sartan drugs, which are used to treat blood pressure, or the extended release version of commonly used diabetes drug metformin, hence cropping up fears of similar type of litigations on those drugs. Also, the street continues to fear factors such as price pressure and factors such as the US president signing a law to lower prescription drug prices, heightening concerns around the same.
Right, so a tough day there for Indian pharma. Thank you so much for those details, Ekta. And with that, it is a wrap on this edition of Business 360. Many thanks for watching. Stay tuned to CNBC TV 18. The news continues on the other side.